We'll see it official. The Bank of Canada holding that key interest rate at 4.5%. The last time in January, they raised it by 25 basis points. So you were right in your prediction, Alan. That was very quick. However, there were rumblings last night that, Canada would be watching what the U.S. was doing. And if they raised it, we would in suit follow. So what does that tell you going forward? I mean, this is a conditional pause. So there is a chance the next rate hike decision, it could go back up again, right?
There is a chance, of course. And to me, it all comes down actually to our dollar. I think this all is going to play out in currency, because what you're seeing is as they continue to raise rates in the U.S., the U.S. dollar continues to gain strength. And where you're seeing it most affected, or how it affects us here, not so much with our stock market, but with our dollar. Our dollar is weakening significantly, just above 72 cents now. And we could see that possibly fall even further if the U.S. continues to raise rates in the coming, meetings. There's a meeting next week. The talk is they could raise 25, but now maybe even as high as 50 basis points. And if we remain on hold or paused for now, then you could see our dollar continue to fall. So I think whenever you see Bank of Canada, Federal Reserve, so central bank discussion, speaking, talking, and perhaps changing of interest rates, it plays out more so in our currency than it does in the stock market here, at least for the TSX.
Okay, interesting. And what do you think are the current drivers of inflation? You mentioned that it is going down. Of course, we saw that food prices still at a whopping 11.9%. So what will you be watching for to kind of measure where we go in terms of inflation?
I think everyone's looking at services. You see, that's been the sticky part of inflation. We've seen goods prices fall, although, like you said, groceries are still pretty high, but they're actually down from where they were at the peak. But it's the services inflation. That's where things are become more difficult. So going from 8%, where we were in inflation here in Canada, to 5.9%, that took so many months. But going from about 5% to the target rate of 2-3%, I think that could take even longer. And that's where things start to get sticky. So it's going to depend on what the Bank of Canada wants to do. Do they want to get to that terminal or final rate of 2 to 3% inflation sooner rather than later? Or will they continue to be patient? And I think that will dictate whether they raise rates in the coming months or continue to pause or stay on hold for the rest of this year.
Okay, Alan, what is your prediction for the coming months? That next decision that they're set to make, will it go up? Will it stay even? Or is there still a lot to watch for before you make that?
I think there's a lot to watch for. Obviously, we want to see inflation data. We want to see what they do in the U.S. We want to see what they're doing globally. Inflation is coming down right across the globe, but from very high levels. So will inflation continue to fall here in Canada? If it does, I think the Bank of Canada has reason to stay with this pause. But if we start to see it tick up again, Tiff Macklem has already said that this pause doesn't necessarily mean the next rate movement is a cut. It could actually be another increase. So we need to keep an eye month to month, quarter by quarter, to see where inflation is. And if it starts to tick higher, we could see rates continue to rise. I don't think it will. I think we'll continue to see it come down. I think a lot of things are improving. Supply chains, oil prices, things like that are definitely helping inflation come down. So I think that will continue and will remain on this course.
Despite the war still happening in Ukraine.
Yeah, and that's an interesting thing, right? Despite the war in Ukraine, oil prices are still muted. I think a lot of that has to do with what's going on in China. China growth is muted. They're talking about 5% growth versus a lot higher, which is what they're normally used to. So China is actually importing a lot less energy, and that's helping to keep the price of oil down globally.
Wow, there's so many factors at play. It's almost hard to keep track of all the moving pieces. Well, Alan Small, a financial planner with the Alan Small Financial Group. Really appreciate your insight and meeting you in person finally.
Thank you.
Take care. Appreciate it.